All right. Good afternoon, team. Good afternoon. Good afternoon. I hope you're all having a wonderful Sunday so far. Thank you all so much for joining. I greatly appreciate your Sunday time, and I hope I do succeed at keeping you informed and giving you the importance of this upcoming week. Um, I didn't do the session last weekend on the Labor Day holiday, and throughout the whole week, I greatly regretted it because so many things happened through that week, and I feel like if I had done that session, we would have had a great week overall. We would have prepared, and we would have been good. So this is why, despite today not really feeling the best, not having the best understanding of the market, and having to be in the position to observe in order to figure out what we're going to do, I still wanted to do the session and give you guys the things that are happening so that you will also be prepared in your own way. So let's just talk about the S&P 500 right away. And if we take a look at the S&P 500, we have been going up, and the candles have been tightening in range between these narrowing two lines. Now, to really make things simplified and show you why this is important, I'll show you some charts here. So let's take a look at these examples of rising wedge formations. So as we can see, we are starting to digest here just at the very top of this rising wedge formation. And it is getting very concerning because the sell volume is there, the sell pressure does seem to be there, and two of the large sectors are really, actually, there are two other large sectors that are also really giving out this sell-off vibe, and this is really complicating things. So if we take a look at this particular pattern, we can see that it is overall bearish. And if this were a bearish market, this would have already sold off. We would have gotten a pullback down to 618, and that would have made things a lot more clear, given that the sell pressure would have been here. But this particular market has been very strong. The timing of it, the timing essence has been very, very favorable for the bulls. And I'll put this into example. We have FOMC rate decision coming up on the upcoming week here. Not this week, but I believe the upcoming week, if I'm not mistaken. Team, if I am mistaken, do let me know. But I believe it is next week, right? On the 17th, 16th, and 17th of next week. Sorry, yes, so not this week, the upcoming week. And FOMC rate decision is likely going to result in a rate cut, and this will probably be the start of rate cuts coming in. And when rates do go down, the stocks that benefit the most are going to be the small caps and financials and so forth, or the regional banks of the financials. And the market has been preparing rotation inflows into these given sectors. So this is what I mean by the market just has favored the bulls. Even when some stocks do pull back, you got the other sectors that are just pushing higher and grinding higher. Now, this is where we currently are. We are above the resistance level of 645, but we did get some heavy sell volume on the weaker jobs data that we got on Friday. So overall, the S&P 500 looks mixed, and it just looks to be in a area where we have to be cautious. We have to be cautious because, like I said, it can sell off. And I'll show you another chart. Now, in some cases, the bearish rising wedge can advance higher and have what is known as a melt-up operation. And if there were some crazy news, some crazy bullish catalysts that came out to push the market towards that, this would be a whole different case. Obviously, that would push us towards the 700s 100%. But that, in my opinion, is a rare case because the market has already gone up so much. And I personally can't think of any catalyst that can really bring in that short squeeze pressure to break out of this rising wedge. So I think it would be more healthy for the market to pull back here, somehow, some way, pull back to the 620 area where bulls have defended uh, twice already, and make it the third time. Confirm the demand there, get a rebound, move back up, and you got a lot of liquidity. You got a lot of shakeout, fake outs from the weaker hands. You got stronger hands, and now you just got an overall bull flag with the moving averages catching up. That'll just make it easier to get demand to advance higher. So a pullback will be good, but I just don't see how we can pull back going into rate cuts that are seen as something that's quite bullish. So this is where the dilemma comes in. But when we look at price action, it's really telling us something else. We take a look at this inverse chart of SPY, which is the opposite of SPY. It is inside of this bullish hammer. Like I said, this is a mirror chart of SPY. The reason why we look at this is because it's very difficult to be bullish. It's very difficult to be bearish or to prepare on a bearishness because we are generally bullish, if that makes sense. So if we turn this inverse chart, uh, if we basically inverse the SPY chart and we look at it from a bullish perspective to see that bearishness, then we can see the signals that are there. We have this bullish divergence that has just been holding so well. So going into this week, if I do see a breakdown of this RSI on the SPY inverse chart where bulls are finally going to put an end to this bullish divergence, that's going to make me more that'll be the first signal that I'll get that can be a potential there can be a potential squeeze operation where the market can continue to advance higher. So that's what I'm really looking out for on the SPY chart. And if we take a look at the actual chart, you can just draw your trend line on the RSI and just wait for a breakdown. Sorry, wait for a breakout. If we finally get a breakout heading into this upcoming week, then I'm going to be more at ease to want to trade the outperforming stocks and feel how do I say this? Basically feel like the market is not going to sell off heavy because the bearish signals are getting invalidated slowly as bulls continue to eat time off the clock. When they do eat time off the clock, it is generally a good thing. It just tells us that demand is too high and there's just not going to be a sell-off. Bulls are going to digest here, exchange hands with new buyers and so forth, and just reinforce the continuity of this trend. So this is what I'm really looking for heading into this upcoming week. Now, there are some other mixed signals as well that we need to discuss. XLF, which is the financials. This is the financial sector where we have, let's take a look at, we have Berkshire, we have JPM, V, MasterCard, Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley, American Axe, Citigroup, we got Schwab, we got BlackRock, all these banks here, all these financial stocks that are looking bearish. Basically, as we can see, we have a bearish supply bar on the daily time frame, and it is happening at the highs here. Seeing this major breakdown reaction is definitely concerning below the 20 EMA line, and it is backed by volume. So that is definitely concerning. The bearish divergence on this particular chart is also playing out. So that is making me concerned going into this week. And this is why I feel like observing heading into the upcoming week will not be so bad. Now, there are stocks that I shared that I think are going to outperform regardless of the market conditions, and we're going to discuss that shortly. But we looked at the XLF, right? And it looks bearish, right, team? As we can see, we have a big supply bar, and unless bulls really absorb this and come back up above 53 on Monday, then whatever move we get will very likely just come back up to absorb the supply. And then just as we get close to the 50% retracement, the bears are going to double down and just sell off and take out the green candles that we get for Monday or Tuesday or whatever it may be. If we do see that, I'll see that as a bearish signal that the market is likely trying to pull back, maybe go down, de-risk towards 51 and prepare for FOMC rate decision. So this is XLF looking a little bit concerning here on the daily time frame. Now, what I want to show you here is the technology. Look at how weird the technology looks. It is so confused. I've never seen the technology sector. I mean, it's not really confusing. It's just it is to be honest with you, it's really astonishing to experience such where we have some stocks within the technology sector that are absolutely getting obliterated. And then we have stocks in the technology sector that are just absolutely ripping towards the skies. And that was Google, as we saw last week. Microsoft going down 2.5%, while Google AVGO just ripping higher. And not only that, you have some industries that are basically uh, I mean, you got, for example, we'll take a look at NVIDIA, the technology. Oh, wow, that does not look bad. Okay, so it looks like a head and shoulders, but as we mentioned last week, we mentioned that we want to see NVIDIA fill this gap here at 167 and retest that support level. This is definitely good. I can expect NVIDIA buyers to potentially show up here. Now, if we do start to break below 164, I definitely would be concerned. But from the way that I see it, they have filled this gap here. They've filled this gap. And this does not look too bad. I would be afraid to short NVIDIA here, to be honest with you. But we look at AMD now. AMD, we did say this one was going to come down. I actually shared it in the make sure you guys always check this channel out. Fire charts only. I usually share my late night setups, and I did share AMD and SMCI breakdown. As we can see, AMD is just breaking down very heavy from that bear flag that we had. And we had a massive supply bar here that's just continuing to sell off. And then this is the crazy part. From the same industry, we got AVGO that is absolutely ripping to the skies. And we also have MU that's absolutely ripping to the skies, as we can see. Just very, very strong. It's breaking out of this bullish ascending formation. Just overall, very, very bullish. And yeah, as we can see, definitely very mixed. Now, let's go back to the XLK technology sector here, where these particular stocks are part of NVIDIA, Microsoft, Apple, AVGO, Oracle, PLTR, Cisco, AMD, CRM, IBM. If we take a look, um, the volume has been really there. I mean, take a look at the volume, the buy volume increasing. The TTM squeeze has been reset, which tells us that there is overwhelming fuel on the tech sector. Absolutely overwhelming fuel. And this is backed by obviously Google. As we can see, Google ripping to the skies, AVGO ripping to the skies, Apple also ripping to the skies in the prior week. We bought it here. We bought it at 224, the higher low structure, and now we're trading at 239, which is our price target where I secure profit for the team. But yeah, as we can see, technology is really giving out mixed signals, and we just don't know what's going to happen here. Will this head and shoulders here play out, or bulls finally break this downtrend and continue to advance higher on the technology sector? Very hard to tell. Now, materials here is looking a little bit bullish, as we can see. XLC communications and streaming platform. This is what really made me regret not doing the prior Sunday meeting, because I was doing research on the sectors, and I had noticed that the communications and streaming platform is the newest sector of the 11 sectors of the economy. And this one is the most undervalued out of all of the sectors. And when I was looking at it, just making this move here, I got a lot of FOMO on the stocks that were in this particular sector, which are Meta, Google, Netflix, EA, T-Mobile, Disney, Comcast, WBD, Warner Bros. Looks really good, by the way. I've been looking at the chart. But yeah, a lot of these stocks, streaming platforms and communications, are looking undervalued. And yeah, the sector has been on fire. While most of the tech stocks have been pulling back, these industries have been grinding higher. And I think it might be a little bit too late to chase it now, but yeah, a definite regret from last week. Now, this is a sector, XLV technology sector. Um, Given with what's going on with the market, this particular sector could be the one that gets the rotation. I think healthcare can continue to get rotation inflow, and these are the stocks that are part of healthcare. We have been sharing it almost every week with our team. UNH is looking very good. It looks like we're finally getting that expansion, and we're going to get a big move on Monday or Tuesday towards that 324 target that we have been watching. But yeah, a lot of healthcare stocks are looking good. And if the overall market does pull back, healthcare is a good sector to trade off of, especially if you start to see it on our S&P 500 scanner. For those of you that follow my system, the stocks that show up here are usually going to be good, especially if they're healthcare heading into the upcoming weeks ahead. Now, let's take a look at another sector that I've been watching, XLRE. The real estate sector has been just grinding against this particular resistance line, and I have really been seeing a lot of healthcare sectors showing up on the S&P 500 scanner. It's like they're just the stocks have been going. The outperformers of the uh, given sector has been going up, but it looks like the overall sector is also going to start breaking out. And I think this can see some heavy upside if it does come to reality. Now, the reason why I'm scared of this particular sector is because there's a lot of bearish talks that uh, there could be a crack in the housing market, blah blah. But I think it's all BS. I mean, I just with private equity now involved and really scooping up houses at light speed to turn it into a subscription. I find it very difficult for prices to go down the way that we had seen in the past. And I think the only thing that sorry, I won't say anything, but all I'm saying is there is a but. Real estate can indeed benefit from lower rate cuts to come in the coming months, and I think this breakout of this downtrend can be very well worth watching at this particular level. So do keep an eye out. The more they consolidate here, this is going to be good. I mean, they have room all the way up to 42.60 area before you really start to make up your mind and grab the outperformers on this particular sector. But here are the stocks on here. We have PLD, Welltower, AMT. Wow, interesting, because I saw that on my list as I was going through the S&P 500. Oh, it looks like it was AMAT. Sorry about that. Um, but yeah, these are the stocks here that are really looking interesting here that we should be watching. I saw O showing up on my scanner, if I'm not mistaken. Oh, definitely. Oh yeah, look at that team. Look at O. Oh my gosh, this setup looks absolutely incredible. We have a bullish ascending formation, and let's take a look at what a bullish ascending formation usually uh, uh, plays out, or what the anatomy of this particular chart pattern is. As we can see, it's it has bullish characteristics. The anatomy tells us that demand has been higher after each sell-off, with the resistance level remaining intact. And now that bulls are really advancing higher with increasing demand, they're finally getting a breakout at this key level, and they're going to advance higher. So oh, like I said, real estate definitely looks very interesting. And this particular stock can be your starting trade for the real estate rotation, potential rotation that we are seeing. So definitely keep your eyes out on real estate. Consumer staples, looks a little bit shaky, can be a good one, but definitely looks a little bit shaky at the moment. XLK, like I said, it needs to do something at this level. It looks like it can go either way. If the stocks that are weak in XLK continue to sell off, and the stocks that are outperforming start to pull back, given how overbought we are, as we can see from Apple and Google and AVGO, then that this particular sector can start to really sell off. So we do have to watch it. Like I said, being patient and cautious with this given market will not be a bad idea at all. So definitely keep that in mind. Okay, team. XLY here. XLY is also at this level of resistance, as we can see, and it was backed by strong volume. So this is another sector. This is a sector where I am long on it. I am long on Tesla. But yeah, that's really about it. I'm not really looking at other stocks. Now, the stocks I did share on this particular sector when it was getting a lot of rotation inflow was down here. I shared HD when it was trading at 365, 373, and now here we are trading at 415. So for those of you that did trade this one, yeah, this was a banger that we shared from this particular sector when it first started to get momentum. Now, let's take a look at XLU. The utility sector has been getting a lot of selling, and it's just not looking like the best sector to go into. Industrial sector also been going sideways. The sell volume has been very strong, and I think it's one of those sectors where I do want to see a pullback, but there are some given stocks that I'm watching that I think can do really well, and that is Caterpillar. And I think I looked at Uber that was also showing strength, and there was another stock. I think it was Boeing. So let's take a look at BA. But even then, they just I think it might be best for us to stay out of industrials for now. But yeah, financials definitely weakening. The energy sector has been triggering a lot of selling in the market in the last 2 days, and I'm not exactly sure what's caused. Oh, you know what? I know what's causing it. It's the falling jobs. It's the falling jobs to AI that's really causing this particular sector. The lower jobs data that we've been getting, the very concerning data, only 22,000 jobs added. Yeah, that's definitely concerning. So this is why the energy sector has been going down. Whenever we do see uh, uh, probabilities of a recession increasing, we can see that reflected within the XLE energy sector going down because I guess the demand is less. But yeah, now that we talked about the sector really fast, let's go over the stocks that I am holding. Sorry, team, give me one moment. So, sorry, the stocks that I did share with the team that I am bullish for heading into the upcoming week. So, here we are. Let's start off from the very top. We got so yeah, this is the Nvidia post from last week, as you guys can see, the 160 put. And the reason why I say thumbs up if you've read this is because I want to see exactly the traders that reach it. So I mean, obviously it's not to see what I really am trying to achieve with this is our team looking at our post and paying attention to the time and the research that we put in, and it's really a way of trying to get the team to let us know that they are looking at this post, that they are aware of it, and that it is being presented on their radar. So yeah, Nvidia, you can see we shared it when it looked like that, and if we take a look at Nvidia now, it's all the way down here at the 164. So that 160 trade, if you did take it, you did really really well on this particular trade setup. So now here we are for this week. We got CLF. I'm watching CLF here. The stock looks really really good. Now you guys know over the last 3 years, I have had a change of strategy, and there has been strategies that I've learned on my own, and it's really beautiful. The way that I'm able to find any momentum stock in any given sector or on anybody's company profile watch is really beautiful. And this is one of the stocks that is showing up, CLF. we got this demand candle at the 20 EMA line, at the digestion of the 20 EMA line, and it is telling us that we're going to move all the way towards that resistance line at 1392. So like I said, CLF is showing strong bullish momentum as price has triggered this expansion away from the 20 EMA line, and we are going to see more buyers. So to position yourself into CLF trade, you can buy to open June 18, 2026, $12 call at 2.30. This provides ample time and leverage to capture delta leverage to capture further upside as price heads towards our resistance level up ahead. So CLF June 18, 2026, 12 call strike at 2.30 as a swing trade is a good opportunity to pick up here. All right, now the next stock is BABA. If we take a look at a lot of these Chinese stocks, they're looking very, very bullish. Now, this has been a strong resistance for BABA, and given that we got the AI news, I mean, the whole reason why Nvidia is pulling back, why Nvidia lost its steam, is because of BABA. I remember that night I was up pre-market, and I watched the Nvidia news come in, and then Nvidia just dumped really hard. And the news was that they're moving into the industry to compete with Nvidia on AI, and that really affected Nvidia. And it looks like the setup is really there. We got a strong demand candle, and I really would not doubt if this stock starts rocketing towards the 170s. If we take a look at some other Chinese stocks, we got what was the other one that I came across on my watch list? Team, give me some Chinese stocks. Yeah, some Chinese stock names. There was one that there was one that was it PLD? I forgot the name of it. No, that should be a real estate team. What was that stock? It's right. I don't know why I forgot the name all of a sudden. Oh, Baidu, there it is. If we take a look at Baidu, I mean, look at this setup, team. Look at this setup on the weekly time frame. Oh my gosh, man. Wait, did I draw that candle? That's not a real candle. Sorry about that. Oh, that is a real candle. Son of a gun. That is a real candle, team. I thought I drew it, but no, that's a real candle. I mean, just look at how strong of a bullish candle close that is on the weekly chart. Oh my gosh. I think Baidu is going to be an amazing trade here. So take a look at that, team. We're breaking that downtrend here, and it just looks very rocket to me. The target is 114 on Baidu, and let's take a look at a contract that we can alert for the team. Okay, we can buy the January 16, 2026, the 120 call that's currently at 4.70. You could pick it up this week and give it about 2 to 3 weeks, and I think it's going to do well. I think it'll be a nice trade here, and definitely worth watching for this beautiful breakout here. So keep your eyes out on this trade. Baidu, January 16, 2026, 120 call at 4.70. The setup looks really great, very bullish. And I think what mostly bulls or buyers were waiting for, investors, was the Trump meeting. Now, why do I say the Trump conference that we had? Was it on Thursday or something? And what happened was Trump basically talked about or gave his reaction on the China, Russia, and India meeting. And many investors were expecting some sort of retaliation, but Trump's overall and I watched the live event with Trump's reaction, and he was very positive about it. He did say that China was a great friend and that China needs us more than we need them and all that stuff. And that really reinforced the bullishness on Chinese stocks, the certainty there. And I think that was also one of the reasons why the market overall turned so bullish. But yeah, Baidu looks really great. There's nothing really that can affect it on the short term. And I think it would be nice to take advantage of this increasing volume over the last 5 weeks targets there after this breakout. So definitely keep your eyes out on Baidu. Looks really, really good. Another Chinese stock is JD. If you guys want a cheaper setup, this looks good. But I do want to note this one does not look as good as Baidu. Now, this particular stock, I would say that the bullish setup is definitely there. The squeeze operation is definitely there. And the thing about JD is that it's very cheap. You could pick up contracts that have really good delta for very, very cheap. So yeah, as we can see, there's also a lot of open interest on JD. Oh my gosh, the January 16s have over 15,000 on this one, 37,000 on the 35 call. If you really want to give yourself time, you can trade the value of time as well if you want it. If you wanted a more what I call this style is farming, okay? You basically farm trades. You can farm trades by buying these super far out expirations at these very, very, very great prices, just as things start to look good for Chinese stocks. And then what happens over the months and the year or 2 years is we start to see that development come into the general public where the stocks really start to pick up momentum when they're back up here and really starting to like break the new highs and everything where buyers are buying crazy. But you can start farming them when they're down here, but you cannot, like, you'll fail if you don't have time. You can buy time, and if you buy, even if you buy the 40 call, or let's say the 37 call at 380, the January 15, 2027 37 call at 380. This contract is very cheap, and if it does eventually go there and recover, give that recovery, then it can triple and multiple by the time you're up here where people are starting to really buy the stock. So this is what I love about this particular style. And there are so many trades that we have alerted in our Discord that have done just that. So JD, I'm telling you, this is a great opportunity to me. It looks great, and I think it can be worth that opportunity. So like I said, January 15, 2027, 37 call at 3.80. Or if you want something cheaper, you could do the 40 call. That's also a good one. If you really want something to go with the current momentum, then you can do the January 16, 32.50 call. Sorry, JD, January 16, 2026, 32.50 call at 2.85. That can be a great one too. You're getting that delta, you're very close to the money. And if bulls do start to see that overwhelming momentum that we are expecting from a lot of these Chinese stocks, then this contract can be a good one. So definitely worth the watch. All right, all right, all right. And PDD is another Chinese stock. Let's take a look at PDD. Oh, that's not it. That's definitely not it. So this is PDD. I guess PDD doesn't look, it looks bullish, definitely looks bullish, but it doesn't look as great as JD. It doesn't look as great as Baidu, especially Baidu. Baidu looks the best out of them all, and it doesn't look as good as BABA, but it's definitely there. It is definitely there. The setup is there, and with the rising tide, this is also going to move higher. Um, all right, so now let's cover the rest of our watch list. I wanted to show you guys Tesla analysis. Now, the reason why I'm circling back to Tesla is because there was a $1 trillion new pay plan for Elon Musk, which can expand his voting power, which is what he really was after with the prior compensation. And Tesla's board is asking investors to approve the new plan for Musk to get that 975 billion, which is almost $1 trillion. Now, to receive this maximum payout, Musk would need to increase Tesla's market cap from its current 1 trillion to 8.5 trillion within the next decade. Now, keep in mind, I said 1 trillion to 8.5 trillion within the next decade. So Beyond the market cap, we do have this compensation does need performance milestones such as selling 12 million additional electric cars, securing 10 million autonomous driving subscriptions, deploying 1 million robo taxis, selling 1 million Tesla bots, and lifting adjusted earnings to 400 billion. Now, obviously, this is very ambitious, right? But do keep in mind that before this news came out, we had been watching this particular Tesla chart. Now, the reason why I've been watching Tesla every single month is because ever since the IPO, the stock has been inside of this bullish channel on this monthly time frame. So if we take a look at the monthly here, we've gone from this support here to resistance. Now that's one test at resistance. Then we went back to the support. So now what we do is we connect that line, we draw a trend line, connecting that starting point, the origin, connecting it to the second data point, and then extending it all the way. When we extend it all the way, and then we get a retest added again, that places the confirmation, and after the confirmation, you have the what is known as trade off of the trend line scenario. To sorry about that, team. To really give you an example illustration, let's take a look at how trends are formulated. So this is how trends are formulated. You got the origin there, you got the second test, and after the second test, this is where you start to track the trend line. You extend it all the way to the future so that you can catch the upcoming tests. So we can see we come down here, we touch that we have that third touch, and now that we have that third touch, this is the trade off of the trend line, as well as the fourth one also being a trade off of the trend line. So we got the second test, and we didn't really get that big move up until we went for the third one, confirmed it, and then we had that massive second test there. So we pulled back and we almost tested that trend line again. Bulls came in very strong, and now it looks like we're holding really well to get that third touch at that bullish trend line in the upcoming years. So I think this is a good catalyst for the company, and it's really worth watching Tesla because it's starting to look bullish on all time frames, and the stock is known for that massive impulsive rally, as we can see whenever we do get that momentum going. So it is a very ambitious plan for Tesla, and to meet that, this would mean a great level of growth, and I think it's a great one to keep on your watch. So watch Tesla here. You can start farming long-term call options on it. You can buy January 2027 calls, even if they are very far away from the money. I think they're going to gain value off of I mean, if you guys know, Tesla is one of the craziest stocks when it comes to the Vega explosion. The Vega explosion is when you get that market maker short squeezing and really starting to buy very far out strikes. Like the way that it's going to play out is like, you're looking at 400 call strikes as the wall, right? Then you start to write like 410 calls, 420, 430, 450, and like that gap just widens and widens, and that's what gives the stock that Vega power. So Tesla's very known. Nvidia's another stock that used to be known before the stock splits. But yeah, definitely keep an eye out on Tesla here. I think it's well worth it. It's starting to look bullish on all time frames. And yeah, it didn't perform very strongly on Friday. I mean, don't get me wrong. It did really well on Friday. It was up great. It was up almost 5%. But it didn't sustain its entire gains. It didn't get the breakout that I was expecting above 355. However, going into this upcoming week, I really think the stock is going to get some strong momentum to advance higher towards 366. And if we do break that 366 resistance level, we can head towards the 400s. If we can if we can draw this trend line here, what this tells us is that demand has been getting bought, the sell offs have been getting bought up at higher prices, telling us that demand is increasing. And once bulls do break that resistance level, oh, it's going to be a wrap. We're going to start getting that uptrend in motion where we see higher highs, higher highs, higher lows, and so forth. So definitely keep an eye out on Tesla heading into the upcoming months. I think it's going to be a major market. It's going to be a major mover to the upside. And yeah, that is my analysis for Tesla. Let's move on to ENPH. For those of you that are in ENPH, we're still in the trades here. We're holding. Let's take a look at the contracts here. So we're holding these two contracts. The smaller accounts are holding ENPH March 2026 50 call at 3.20. It's currently trading at 4.60. So I think we're up about around 40%. And we also have the June 18, 2026 50 call for our larger accounts. And that one's also doing really well. The setup is great. We're finally getting that right candle to get that expansion towards the next resistance level at 43 after putting an end to that downtrend, digesting the breakout and printing that strong demand candle there. So hoping we get towards that target so that I can start securing profit on ENPH there. So if you're in this trade, looks really, really good. All right, let's move on to the next one here. So let's take a look at Etsy team. Now, going into, let's take a look at the analysis first. Etsy has put an end to that downtrend, that 3-year downtrend. We finally put an end to it, and we did get that breakout, and we peaked all the way at 70. So we got the breakout in May, and then went on a sporadic rally towards 70. And now we have fallen back down towards where we broke out. And if we go to the daily time frame here, this is the 200 SMA line where we went from a downsloping trend, meaning bear market, to now accumulating. And if bulls do step in right here where the TTM squeeze is reset, the scenario is good, then this would mean that the stock is going to create that uptrending slope, and this can start to see another massive rally to place a new higher high structure in the 70s and 80s, high 70s and 80s. So if that turns out to be the case, and if bulls do hold this important level at the 200 SMA line, we can see another bull market push towards the 100s next. To trade this setup, I'm looking to open January 15. Let's take a look at Etsy. January 15, 2027 call, and the strike that 2027 expiration, and the strike that I'm looking at is the 70 call. So the 70 call is currently trading at 6.0. If you want, you can choose the 75 call. The 75 call is at 5.70. And I'm hoping to keep this one as a long term, because I believe that the stock is greatly oversold, undervalued, and with lower rates, economy in the years to come can see significant rotation. So I think it's a good trade for lower rates to come. And yeah, I wanted to bring that to your awareness. If you do buy it, make sure you give yourself plenty of time. I think as long as you give yourself time, even if you're looking at far out of the money strikes, you are looking at some printers. I mean, with options trading, that's the beauty. You can buy contracts that are very far out of the money, but as long as you got time and it's going in the right direction, you are going to see over 100% plus profit. And in most cases, much more, especially if the contract continues to go in your favor. The beauty with these long-term contracts is that if you do see the stock coming back up to 70, even if, let's say, by November, then you have over an entire year of deciding if you're going to keep it longer here because the stock is digesting and preparing for another large rally towards that 100 target that you have. So this is really the beauty of time. And if usually when that does happen, these particular contracts end up moving 500 to 1,000%, even though they are so far out. Even though they are such long-term contracts with such far out strikes where we pick them up. So it may be a slow grind, but it usually does start to pick up. But yeah, that's a trade that I did want to bring to your awareness. If you do want to trade it with shorter expirations, that's really up to you. Now, last but not least, we got GIS, General Mills. Now, this stock reports earnings not this Monday, but the upcoming Monday, the Monday after. And the reason why I'm sharing this setup with the team is because it is currently giving out this short squeeze operation vibe after the uh, narrowing lines there, creating that shorts or given that, or how do I say, setting up that short squeeze operation, or providing that market where the short squeezes do happen. Now, we did close very strong above the 20 EMA line, and although earnings is not until next week, although earnings is coming up, it's not until next week, and I think this is a good trade to pick up and then sell to the buyers that are going to, let's say, trade into earnings. So even if you don't want to hold into earnings, I think it's a good trade to buy, and you can pick up you can buy to open GIS January 16, 2026, 52.50 call at 235. Now, here's what I say, okay? If the stock is not above $52 by this upcoming Friday, I say do not hold it into earnings. Close it, and I would not trade it into earnings. But if you do get the leverage where your contract is already in the money, then yeah, I would say, you know what, sure, I will take the risk of holding it into earnings because now I'm delta positive, and if earnings does go bananas, I have so much time here to try and capture that move. But yeah, I did want to bring it to your awareness. I think it looks good, even if you do buy it on Monday and end up closing it sometime mid this week or the next week. You can definitely do that. Now, our final stock here is CLX. Now, CLX, our team has been sharing this one with me, telling me if this is a good buy, and I wanted to wait it out because I wasn't sure if this was going to break down, but with all the with all the concerning news, or even if they are, even if they're not really concerning, it does create the fear factor. For example, we got some plague, we had somebody that caught the plague in California, and then we have some other stuff that's going around, and it's really scaring people. And I think Clorox is always, after COVID, it's always going to be in demand. So we do have this double bottom set up here right at this major support line, and given that we have put an end to that downtrend line on the weekly time frame, as we can see with that demand candle, it is worth watching heading into Monday for further upside to come on that potential double bottom there. So my main target on this particular stock is around this supply zone right here, around 140 to 145. And to trade this, you can pick up the January 16, 2026 140 call at 3.0. I think this can be a good trade given the strong demand candle at that key support level there. That concludes my analysis, team. I'm sorry if this went on a lot longer than I thought. I did want to go and cover everything, but I'm glad I did it. I don't want to, just because I don't